In this video, we are going to reveal 4 unstoppable artificial intelligence stocks that you can buy right now for less than $1,000. These are companies with massive strategic advantages, dominant positions in critical AI infrastructure and software, and long-term relevance that transcends short-term market cycles. You're going to learn why each of these businesses matters, how they are positioned to benefit from the ongoing AI transformation, and why Wall Street investors are quietly watching them as core holdings for the next decade of growth. These are not hype stocks or speculative concepts. These are companies with real economic moats, real revenue drivers, and real potential to compound wealth over time as AI becomes more deeply embedded in everything we do. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Let's start with the first AI stock on this list. Palantir Technologies, ticker symbol PLTR, is a name that has become nearly synonymous with data analytics, AI-enabled decision-making, and deep enterprise and government integrations. To understand why Palantir matters today, you have to appreciate that it is not just another software provider. It is a company whose platforms are deeply woven into mission-critical operations for some of the most demanding customers on the planet. Its flagship products, Foundry and Gotham, are designed to take massive datasets, sometimes disparate and chaotic data streams, and turn them into actionable insights in real time. That capability is inherently valuable in a world where data is exploding and decision-makers need clarity amid complexity. What makes Palantir particularly compelling from an AI perspective is that artificial intelligence is not simply an add-on for its products. The company has built its entire value proposition around using AI to deliver real-time insights and predictions that clients could not achieve with legacy software alone. In recent quarters, we have seen Palantir's revenue surge precisely because of this strong AI demand. The company reported a massive increase in its fourth quarter revenue, with revenue up 70% year over year and net income hitting record levels for a software company of its size. Those kinds of growth rates tell you that demand for Palantir's offerings is not theoretical, it is real. Companies and government agencies are paying for the ability to extract meaning and foresight from their data, and that is the very essence of AI value creation. Even more impressive is the fact that Palantir closed a record number of large enterprise deals in that same period. Its total contract value surpassed $4 billion, a figure that doubled from a year earlier. This tells us 2 things. 1. Customers are not just buying Palantir for 1 year or one problem. They are committing to long-term partnerships worth tens of millions each. 2. There is a broadening of the commercial base beyond just the government customers that Palantir originally built its reputation on. When private sector spending in AI begins accelerating alongside government contracts, that is a structural shift, not a temporary blip. From a competitive advantage perspective, Palantir benefits from exceptionally high switching costs. Once an enterprise integrates Foundry deeply into its operational workflows, replacing it with something else becomes expensive, time-consuming, and risky. That leads to highly sticky revenue. At the same time, Palantir's focus on long-term contracts gives it exceptional visibility into future earnings, something growth investors crave but rarely get in AI names that burn cash and rely on uncertain monetization paths. Some critics point to volatility in Palantir's stock price, including steep pullbacks even after strong earnings, as a sign of speculative excess. But price fluctuations are not the same as fundamental weakness. When a company is delivering record growth and accelerating contract values, pullbacks can create opportunities for long-term investors to add positions at attractive price points. For an investor who believes that AI-fueled demand for data intelligence will continue to grow for decades, Palantir sits in a category all its own. Next up on our list is Advanced Micro Devices, ticker symbol AMD. Now AMD is a fascinating case because it has historically been seen as a competitor to Nvidia rather than a leader in its own right. But over the past few years, AMD has carved out a very clear path toward becoming a major infrastructure play in the broader AI ecosystem. The company is well known for its high-performance CPUs and GPUs, but in the AI world it has been steadily working to close the gap with Nvidia in areas like inference workloads, data center processors, and custom accelerator solutions. What makes AMD especially interesting from a growth perspective is its emerging role as a supplier of chips to one of the most high-profile AI players in the world. AMD signed a long-term agreement to supply AI chips to OpenAI with the potential for billions of dollars of revenue over the next several years. That relationship places AMD squarely in the center of the AI hardware arms race and signals that the company's technology is not only competitive, but it has earned the trust of one of the most demanding customers in the industry. In parallel with that, AMD has been expanding its data center CPU and GPU portfolio to meet a variety of AI-related demands. While Nvidia remains dominant in high-end training chips, the inference market and data center CPU market represent vast total addressable markets that are expected to grow dramatically as more enterprises deploy AI at scale. Inference workloads are particularly interesting because they often represent the broader day-to-day use of AI models after initial training. These workloads require energy-efficient and cost-effective processors, and AMD has positioned its products to capitalize on that demand. The way these chips integrate into cloud environments, edge computing applications, and enterprise AI stacks means that AMD is now much more than a niche competitor. It is a genuine infrastructure player in its own right. Financially, AMD has delivered significant stock appreciation in the past year, driven in part by its expanding role in AI. Revenue momentum remains strong, and analysts are modeling double-digit growth for the foreseeable future. For growth investors, what matters is not whether AMD overtakes Nvidia in every category, but whether it secures a structurally significant role in the AI ecosystem. The answer today looks like yes. A company that can capture meaningful share in both training and inference chips, while also expanding its data center CPU business, gives investors multiple levers of long-term revenue growth. Before we proceed to the next company on the list, I want to pause and highlight something important. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Let's move on to the next stock, and this one is arguably the center of the AI revolution. Nvidia, ticker symbol NVDA, is perhaps the most recognized name when it comes to artificial intelligence investing. But beyond recognition, there is a structural reason why Nvidia became the most valuable technology company in the world, and why it continues to be a central pillar of the AI infrastructure story. Nvidia's graphics processing units, or GPUs, have become the backbone of modern artificial intelligence. These chips are not just faster than alternatives. They are architected in a way that massively accelerates the matrix multiplications and parallel processing that makes deep learning possible. That is why virtually every major cloud provider, every AI research lab, and every enterprise building large-scale AI applications relies on Nvidia hardware. In fact, Nvidia's latest financial results show that its data center revenues continue to grow at explosive rates. A large portion of that growth is driven by sales of next-generation GPUs, which hyperscalers and AI developers are buying as quickly as Nvidia can produce them. At one point, management even reported that certain classes of GPUs were effectively sold out. That kind of demand signal is rare in any industry, let alone one as fast-moving as artificial intelligence hardware. What makes Nvidia different from nearly every other technology company in the world is its combined hardware and software ecosystem. The CUDA programming platform has created a massive network effect. Developers write their AI code for Nvidia first, and that software commitment then makes it harder to switch to alternatives. That is exactly the type of moat you want when you are betting on long-term technological dominance. A company could have a great product, but only a few maintain both product superiority and ecosystem lock-in at the same time. Another part of the Nvidia story that often gets overlooked is the sheer scale of its business. The company has grown its market capitalization into the trillions because it is not just selling chips. It is selling the future of computing. Its GPUs are used in AI training, inference, gaming, scientific computing, autonomous vehicle development, and more. In other words, its addressable market is not limited to one niche use case. As AI becomes more pervasive, Nvidia's chips become more indispensable. And it is not just about sales today. Nvidia's research pipeline continues to advance with new architectures coming online that promise greater efficiency and performance. These architectures keep Nvidia ahead of the competition and allow the company to continually expand its lead rather than just defend its position. For an investor with a long-term horizon, Nvidia represents a rare combination of current dominance, future potential, and structural indispensability within the AI ecosystem. Now let's turn to the final stock on our list, Alphabet, ticker symbol GOOG. Alphabet sits in a very unique position when it comes to artificial intelligence. It is not just a search engine giant or a cloud provider. It is one of the most strategically diversified technology platforms in the world. Its Google Cloud business is growing rapidly because enterprises are migrating to cloud environments to train and run AI models, and that puts Alphabet right at the center of the AI infrastructure transition. Cloud is becoming the backbone for modern AI computing, and Alphabet's position in that market is quickly strengthening. Alphabet's dominance in internet search and online advertising also plays into its AI strategy. The company has unparalleled access to data and usage patterns that inform some of the most advanced models in existence. That data advantage cannot be understated because AI thrives on meaningful, high-quality data sets at scale. Combined with the fact that Alphabet is actively developing its own custom AI chips called Tensor Processing Units, or TPUs, the company is not just a consumer of AI hardware, it is a builder. These TPUs are designed to compete with GPUs in certain applications and give Alphabet greater control over its cost structure and performance metrics in AI workloads. Moreover, Alphabet's free cash flow remains among the strongest in the industry. Massive cash generation gives the company optionality. It can spend aggressively on AI research, infrastructure build-outs, and strategic partnerships without jeopardizing its overall financial health. That is a critical advantage in a period where many companies are increasing capital expenditures substantially to build out AI capacity. From an advertising perspective, AI also enhances Alphabet's core business. More intelligent algorithms improve search relevance, ad targeting, and user engagement. That compounded benefit drives higher monetization and solidifies Alphabet's monopoly-like position in digital advertising. And because digital ads still account for a significant portion of the company's revenue, improvements driven by AI have both top-line and bottom-line implications. Now that we have walked through these 4 unstoppable AI stocks, Palantir Technologies, PLTR, Advanced Micro Devices, AMD, Nvidia, NVDA, and Alphabet, GOOG, I want to ask you a question. Of these companies, which one do you think has the most durable competitive advantage in the AI era, and why? Drop your answer in the comments below because I read every comment and your perspective helps shape future videos. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.